What is going on, my stock market bulls and bears? I'm your host, Terry, and welcome to my channel, Buy the Dip. And guys, we're back here talking about that CCIV, that Lucid. That's right. It's been a while since we covered this, and I think today is the day we had to do a video on this. So, guys, we are up over 9% today. Where did this come out of? Now, we're going to go over a little bit of everything. There's an article out here we're going to cover, and as you guys can see, I told you all before, I used to have 200 shares of this, and now I'm down to 100. So real quick, what happened? So I was selling covered calls weekly, guys. I was selling those covered calls, and I was getting some premiums coming in. It was looking nice. Well, the beginning of this week, when the stock started shooting up, last Friday, I sold a $25 covered call because the stock was down around $23 or so when I kind of sold that covered call. So I was just figured collecting $100, $200 a week on these covered calls, and lo and behold, the stock started getting a little bit of momentum, and the stock did end around a little over $25 last Friday, and the person on the other end wanted to buy it. So congratulations to them. They're up, look pretty good right now, but I'm happy because as you can see, I had 200 shares, and I did have an average cost on those 200 shares at $21.54. So I'm still sitting here with 100 shares at $21.54. So I made, a good profit on those, plus the covered call income. So I'm happy with it. I made money. The person on the other end made money. I'm not greedy, guys. I'm just happy we're all getting some money here in the stock market. So when I have these 100 shares, I'm being a little bit more picky because I don't want to go with no shares. But at these prices, I'm kind of, tempted to want to sell a covered call, maybe like a $30 covered call, and if it hits, I get $850 in profit. As you can see right now, I have up 33.46%, up $720 on this position right now. And one thing I learned, as you know, as a CCIV investor, we all should have sold when this thing was $50, $60. So as we know, with most of these SPACs, guys, there is a run-up, and then once the merger happens, poof, it just dips after the merger. We know that happens with all the SPACs. So as you can see, I still got all my buying power here, over $2,456 in buying power, and that was from the $2,500 I did get. Now, I did go in and purchase some other stocks. I bought ticker symbol BARK, BarkBox. Check out my recent video on that if you did not. So guys, let's get in here and kind of go over and cover this article. So here it says, CCIV stock. 5 reasons Churchill shares are climbing ahead of Lucid Motors merger. Here are a few of the catalysts driving CCIV stock higher today. Now I do want to say, guys, before we get started, I did get an email from Robinhood to go in there and vote. So if you got the email from Robinhood, you should have got it last night. Go in there and vote so we can get this merger through. Now, this is a stock that I'm going to be coming in and out of a lot, I think, because I want to be a part of this, but I want to be able to capture gains when they start getting good, because we all know how much we could have made if we sold this at $50, guys, and it went back down to even like $17 and $19. So, here we go. Ahead of the highly anticipated merger of Lucid Motors, investors of Churchill Capital and CCIV stock have started to see some positive momentum. Indeed, CCIV stock closed higher by nearly 10% on heavy volume today. The recent move comes from amid resurgence to the growth stock market. Investors appear to be willing to risk more capital in the markets today than ever before. And amid the risk on sentiment, SPACs and de-SPAC companies are once again finding momentum. That said, Churchill Capital is a company with its own set of catalysts right now. Let's dive into the 5 of the key factors driving CCIV shares higher today. CCIV stock higher on the key catalyst. Perhaps the key catalyst driving the shares today is pre-order data. The company reported that it recently reached a new milestone with respect to the pre-orders. In fact, the company boasts having 10,000 pre-orders for its flagship Lucid Air vehicle. These pre-orders are a bona fide reservation with appropriate deposits. Indeed, Lucid is being careful to specify this given the pre-order fiascos we've seen with other EV players. And additionally, in the company's press release, Lucid Motors' Peter Rawlinson made some interesting comments. He said the following: the prospective two-horse race between Tesla and Lucid. Ultimately, it's a technology that's going to win. What's missing here is the recognition that is a technology race. And right now, there is one runner in that tech race, and it's Tesla. That's why Tesla commands the market cap, and that's why in its preeminent position, we have a world-class technology we aim to in the two-horse race. On top of the press release, Evercore came out impressed by Lucid's product line following a test drive of the Grand Touring Edition Air. Indeed, Evercore appears to be more bullish than ever on Lucid's products, after assuming its product line as well as a pre-order increase and potential commercialization ramp. And there it is, guys. So that is the article on Lucid Motors driving it up. Like I said, I've been in this game now. We're coming up, been in this around a year, and we've been through the SPAC deal, man. We have had Golden Nugget. We could have sold Golden Nugget, guys, at $27, and now it's down to $12 and $13. We bought in here at Lucid, as you see, really low. I was buying in at Lucid at like, what was it, $10 and $15 back when the whole rumor stuff was happening. I was buying it at $15, $20, I don't know. But back in the day when it wasn't even confirmed it was going to be Lucid, I was buying in shares in CCIV, and we could have sold them at like $60, but we held on because what killed it, if you remember, was the valuation. And that is what drove it down. So, as I learned, there's going to be words of advice. You never marry a stock, guys. You just date it. That's right. You never want to marry a stock, because we've watched a lot of these stocks in the past year. We buy them at great prices, but then we don't want to sell when they go up. We think they're going to keep going up. But what do we learn? 99.99% of the time, the stock will come back down. So what can you do? You sell it up there, and you know what? When it dips back down, you rebuy it. That is the plan. That is the plan, guys. That's what I'm going to do. So I sold those 100 shares at $25 a piece. Now keep in mind, I was getting weekly premiums on that as well. So it ain't like I just sold them for $25. I got a few $100s in premiums for a couple of weeks rolling by. So I actually got a little bit more because it was kind of stagnant for a while. It never got above the covered call price. And the 1 week it finally did, and I was forced to sell it. So as you can see, I'm hanging on to this cash here because if for some reason I'm getting tempted, guys, to possibly want to sell this $30 covered call. And I tell you what, if it sells at $30, I'm happy with it. If someone else gets great gains on the other end, I'm happy for them too. I just want to be able to lock in my gains, keep my buying power available, because as we know, the market likes to do rotations, and once rotations come out of the SPACs and the EVs, that's when I'll rebuy and enter in on the dip. We've been in this long enough. We know how to get gains, and we know what the market's going to do. It's never going to keep going up. There's always going to be dips, and there could be crashes. We've been through that February and March, and whoo, that was a rough one, guys. That was rough going into March and April. We were seeing red, I believe, for him as 2 or 3 months straight. So that is my update on CCIV. Just wanted to bring you kind of where my portfolio has been on CCIV, and that is my plan, guys. I've kind of retrained myself into taking profits. It's just like the casino. If you're up money, you don't go back and keep gambling. You want to cash out and go home with your profits. And once you got these gains in here, that's what we want to do. Capture gains. That's what it's all about. We could have did that in Torch and Meta. Same thing. We bought in at great prices. It ran up. We could have sold out, but what did we do? We diamond handed it, and it drops back down. Now we're going to see what it does in the long term. So, guys, hope you all enjoyed my little bit of insight on what I think has been going on and what my plans are in the market. You guys don't have to follow. You want to keep holding on, hold on all you want, guys. But I'm here about taking profits and getting those gains, keeping the cash on the sidelines, and rebuy on any dip. That's what it's about, man. Taking those profits. So, guys, I will catch y'all in the next one. And remember to buy the dip, baby. Let's go.